Warren Buffett is set to step down as CEO of Berkshire Hathaway. He'll be handing over leadership to Greg Abel. But before that change takes effect, we want to look back at Warren Buffett's legacy.
They're too frothy. So when he started Berkshire, this was a profound change because all of a sudden, he's not looking just to make a performance fee. He's looking for permanent capital. So he didn't want to have to deal with redemptions. He didn't want to have to deal with writing letters every quarter and keeping people in or justifying his moves. He wanted somebody to think longer term, and that was a huge shift in his mindset when he got into his 40s. And every scholar of Buffett will look back and say he would have never become one of the richest men in history if not because of this permanent capital structure, right? But more profoundly, it was always really about GEICO. I think that we talk about the See's Candy story because it's easier to understand, but he bought GEICO and then basically he made all of his policyholders investors because what he got with the float from GEICO, you take money in for insurance and then what you don't pay out in claims, you can invest. Well, he was one of the greatest investors of all time, so he had a source of capital that had very, very low cost. It was liquidity that, he didn't have a liquidity problem with investors saying, hey, we need to nab this cash. So his ability to look forward into the future and know how much cash flow he was going to get made it a lot easier to take over companies and to buy things and have a schedule. Nobody had done this up until Buffett. Near his client base, he wanted to make sure that he was selling long-term value. He wanted to be sure that he was the original Bitcoin tout, right? He wanted to make sure that people bought Berkshire and held it forever and never sell your Berkshire. And so not only was the structure designed that way, not only did he have permanent capital, but through his letters, he would talk about moving beyond volatility and not having to think about volatility, talking about a margin of safety. Everything he bought was, a value. He was buying dollars for 50 cents. And on top of that, he was a salesman, right? He talked about underperforming during bubbles and that compounding was really the way. And I think he convinced people that the moats were really about competition. I think that was one of his greatest magic tricks because really what he invested in through the most part of his life were monopolies and places that didn't have competition and were not based necessarily on the innovation of America, but was based on companies like an Apple computer that just had all the cards. And I think he made people comfortable with that type of, monopolistic oligopoly inside of America. Here's what the thing is. Buffett's legacy is the architecture of Berkshire Hathaway. His legacy is how he did this.